The long-awaited inflation report was released, but investors did not clear up their expectations. Inflation remained sticky in August and surpassed the consensus in a few metrics. Instead of a surge in volatility, the CPIs baffled investors. The US stock market was hit by selling on Tuesday. After a rally on a Monday, the benchmark stock indexes closed in the red yesterday. The Dow Jones logged the smallest loss of a 0.05% downtick. The Nasdaq dropped by 1.04%, having negated all gains of Monday, and the S&P 500 skipped by 0.57% to close at 4,461 points. In the New York pre-market, the major stock indexes traded quietly, wavering between dips and gains. Futures on the stock indexes shed 0.05 and 0.16% before the opening bell. The S&P 500 is expected to trade in the intraday corridor between 4,440 and 4,500 points. Oracle shares stumbled by 13% to their lowest since June, after the cloud services provider projected current quarter revenues below target figures. Cloud computing giants Amazon and Microsoft's shares fell by more than 1%, weighed down by Oracle's weak forecast and the rise in yields of US Treasuries. Apple shares dropped by 1.8% after the rollout of the new iPhones, and notably the manufacturer did not raise prices due to a global slump in smartphone sales. Apple stocks also took a hit from news that the Chinese company Huawei Technologies increased its shipment forecast for the Mate 60 series smartphones in the second half of the year by 20%. The most heavily sold shares in the S&P 500 index were Tesla's, which sank by 2.23%. Of the 11 sector indexes in the S&P 500, 8 declined. The leaders in the drop were information technology and communication services. However, the S&P Energy Index gained 2.31%, unsurprisingly, as oil quotes rose by 1% on Tuesday, intensifying inflationary fears in the market. Futures on the stock indexes traded mixed on Wednesday, but showed a slight uptick after inflation data was released. The data painted a relatively mixed picture, which might have limited influence on the Federal Reserve's policy moves, largely dependent on either an optimistic or pessimistic view of the situation. The Labor Department reported that the CPI climbed by 0.6% in August from a month ago, in line with the consensus. It's the strongest month-on-month growth since June 2022, and the CPI grew moderately by 0.2% in the two previous months. The gasoline prices is mainly to blame for acceleration, with its 10.6% jump versus a 0.2% increase in July. Gasoline accounts for more than a half of the inflation growth. The energy price leapt by 5.6% from a 0.1% uptick because all energy components went up. The annual inflation rate accelerated to 3.7% in August from a 3.2% in July, and the score is higher than the expected 3.6% growth. Though consumer prices have grown for the second month in a row, the annual rate declined from the peak of 9.1% in June 2022. The core CPI, excluding volatile food and energy prices, rose by 0.3% in August on month, an uptick higher than a 0.2% in the consensus, and after a 0.2% increase in July. Costs of services not related to energy, namely transport and housing, went sharply up. Such components are viewed as a barometer of inflation driven by demand and is closely monitored by the Federal Reserve. The annual rate of core inflation slipped to 4.3% last month, the lowest level since September 2021, from a 4.7% in July, matching the forecast. Prices of accommodation, vacation, clothing and new vehicles declined. Besides, prices of second-hand cars and trucks, as well as medical services, went down. The vast majority of financial markets anticipate that the Federal Reserve will leave interest rates unchanged next Wednesday. But a rate hike in November remains on the agenda as inflation in the services sector, excluding housing, continues to run high. As for the corporate sector, Apple shares fell by 0.4% in the pre-market the day after they ended down 1.7%. Meanwhile, other top mega caps rebounded, including Tesla, which added 1.8%. Ford shares gained 1.8% due to plans to double their production of F-150 hybrid pickups by 2024. Moderna shares increased by 2.4% after the pharmaceutical manufacturer announced that its new flu vaccine met its primary endpoint in late-stage trials. The currency market is trading almost flat. The US dollar index was hovering at around 104.65, and the intraday CAD for the index is seen between 104.30 and 104.90. The pound sterling and the euro weakened against the US dollar ahead of the key report on the US inflation. The CPI data dampened optimism of dollar bulls, though the greenback pulled back moderately. The data roughly coincided with the market expectations, with the gasoline accounting for much of the increase. However, the core inflation rate on an annual basis slowed down, which hardly changes the expectations of Fed's further policy moves and the outlook for its November meeting. Now, forex traders are shifting attention to the ECB meeting tomorrow. Markets have raised their bets on a further rate hikes despite a decline in business activity in the Eurozone last month. Currently, traders see nearly 70% probability of a 25 basis point increase. The Canadian dollar is trading sluggishly today. The USD CAD pay is trading at about 1.3558. The instrument is likely to trade in the intraday CAD between 1.3520 and 1.3580. The loonie is staying afloat thanks to a rally in the oil prices, which climbed to a 10-month peak amid expectations that crude supplies will remain subdued until the year end. Oil prices made a minor retracement later. The recent cuts in crude production by 1.3 million barrels per day until the end of this year will cement a significant market deficit in the fourth quarter, the International Energy Agency reported on Wednesday. Meanwhile, the agency's demand growth forecast for the fourth quarter was downgraded by 600,000 barrels per day. The ongoing supply cuts could push Brent futures above $100 per barrel threshold by the end of the year, Bank of America analysts said on Wednesday. And for now, Brent crude futures marginally declined by 0.08% and settled at $91.94 per barrel. The crypto market has got stock flat. Bitcoin is trading at about $26,120. Popular altcoins are trading mixed, and despite expectations, the crypto market gave a muted response to the inflation data in the United States. Crypto assets are trying to consolidate at the day intraday highs. The intraday outlook for Bitcoin has not been revised. The token could spend the day in a range between $26,000 and $26,350. If the crypto goes beyond the borders, the price could decline to $25,700 or rise to 26,600. Watch our videos to check your trading decisions. Make profits with the InstaForex. Our analysts are ready to answer all your questions. See you online tomorrow.